So we'll start the recording. I'm only working off one screen today, guys, and so what I'll do is I will, at the proper pausing points, I will check for questions and answers, but still be, feel free to write your questions and answers in, and we'll move from there. So welcome everybody to the How to Make Money Trading Stocks webinar for Friday, April 15th. And the government gave it through a curveball at us this year, in that tax day is actually on Monday, the 18th. And so it gives you a couple of extra days to get those taxes done and and pay your fair share. I want to remind everybody that all the materials that we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. There's Michael's disclaimer. This week again, I reiterate each week, training is such an important factor, and I recognize that many folks are still out there in the workforce and with a 9-to-5 job or a 6:30 in the morning job till 6:30 at night job. I know that when I left my last corporate job, 12-hour days were very common, so it was really a challenge to be able to trade. And that's one of the reasons why we record everything we do, so that you can find them when it's a good time for you. This past week we went in and had some great participation and great comments on the training we did this past Wednesday night about when to go for the home runs with a trading plan, and there are certain points when you in fact can go for the home runs. If you're interested in seeing that training session, you can find it at the basically I posted it under the blog portion of my website, and so you can actually go to the front page of the website, go right down to the bottom, and you can see that training. And for those who aren't premium members, that's the kind of training we do on a regular basis. So our next session will be the 20th, which is this coming Wednesday night, and we're going to go how to set conditional orders. I find that that's always a very important thing and worth refreshing ourselves on. Each different trading platforms has its own mechanism for placing conditional orders, and so every trader needs to make sure they understand how their system is set up. I trade with the Thinkorswim platform through TD Ameritrade because I like the flexibility that it offers me for setting those conditional orders. And but you have to be aware. I know I traded with the Fidelity platform for in excess of 20 years, and it just did not have the flexibility to be able to allow me to design trades that took advantage of conditional orders and that type of thing. So that's one of the main reasons why I switched over. So what are we looking at this week? Today is monthly expiration date. It is not Triple Witching Friday, which is the quarterly expiration, but it's just a regular monthly expiration. The markets throughout this week have shown a positive bias, but each one of the indexes finds itself, has moved its way up into a resistance zone. And with the 18th being the last day for people to contribute to their 401ks and IRAs, I look for potentially a pullback next week. I don't know how much it will be. I don't know if it'll be a healthy pullback that'll take us down back to the 38.2 retracement level, where we could plan trades around that level, but we will be watching the market very closely going into next week to see if in fact we are going to get a pullback. What comes the week after next week? Well, the Fed meets, and the Fed has been kind of mercurial in the way they have been setting up and talking about what they're going to do. Depending on which of the Fed presidents you listen to, some of them are very much hawkish, and they want to raise rates sooner than later. In other words, they're saying, no, we're not going to raise rates because there's too much stuff going on in the world out there. I'm anticipating, again, I'm playing on a theme that what's going on in the market right now is very similar to what went on in the market back in 2008 in the January, February, March, April, May into June time frame, and I'm anticipating a little bit of volatility increasing and returning to the market. For those of you who are the option traders in the active trend trading system, that's one of the reasons I shot out that buying a call on the VXX as it was clearly a speculative trade, but if the VIX starts to bounce up, that will pay for itself very quickly. And so beware, April 28th, or actually 18th. So on our stocks above the 20-day moving average, here's where we were last week. We were bouncing back up above the 45. What's transpired this week? Well, we got a nice healthy bounce back up into the 75 level at about 11 o'clock this morning. 75% of the stocks on the NYSE. And this particular index that they're measuring for bar chart, it's a combination of the NYSE and a few other stocks, but it does sample a large portion of stocks that are non-weighted. And so that's one of the reasons why Mike and I use this this particular index or this particular indicator. And what do we have going on? Well, we have come up and came down here and bounced. This was not necessarily a buy signal, but the stocks 75% above the 20-day moving average, which is telling us that we probably had some good bounces. And if you've been doing your homework this week, you saw some good bounces off of the either the 8-day, the 20-day, and in some cases the 50-day moving average. And this is what's reflected in what we have going on here. When we again, as I've shared with the past, we do not use this particular indicator as a indication of when we should potentially go short. It seems to be much more predictive when it's down here below the 30 level. And you can find this at barchart.com, and you're looking under the momentum areas. And if you want a link to that, you just have to email me and I'll be glad to send you the link for this particular indicator. The one that I also like to take a look at is the longer term. This is a monthly chart, and as we can see, at last week we were up at 45, a little bit over 45% of the stocks above their 200-day moving average. This week we're finishing up at about 53%, and it looks as if we may actually climb a little bit higher. But I'm still looking at what's really held up well. Again, remembering this is a monthly chart, and look what's held up across here. There's a trend line. This little triangle or flag or a pennant that we're looking at for the S&P is holding up fairly well. We may have stuck our head above it this week, but this upper portion is acting as a strong level of resistance. And when we get to the index charts, you'll see I went in and redrew my channel lines based off of the weekly charts and got them precisely at the highs for the week. And we'll see with the S&P, this week's move has actually stayed at and within the overarching downward channel that has been in place since about July, August last year. And so we're testing up here at resistance, and if I draw in a similar trend line there, and it didn't straighten itself out, we have broken through this, and so this kind of gives us a mixed signal of what we can expect. Mixed being it could in fact just continue to push higher, or it could retreat and test. Regardless, there are still about 47% of the stocks on this larger broad index that are still below their 200-day moving average. And again, if you've been doing your homework and doing your stock evaluations, even in the evening time, you've seen that many stocks are pushing up against that 200-day moving average, and some of them are popping through, and others are rejecting that line and falling back down. So that's what we've got going on there. So okay, as of about 11 o'clock this morning, as for the week compared to last week, the Dow is up about 1.6%. The S&P is up about 1.4%. The NASDAQ up about 1.2%. The composite up about 1.5%, and then the Russell. The Russell is really kind of been jumping out and leading a bit, which is a positive thing if we're because small caps tend to lead either the market up or the market down, and the Russell has been a lagger now for the last over the last year, and so we may see the Russell, if the Russell gets it charged up and starts moving again, that would kind of blow the idea out of the water of the current market acting like it acted back in 2008. But again, that's why we will continue to watch the charts, and we'll be quick to change our mind if in fact that is the case. So let's take a look at the charts. As you can see, I'm only working off of one screen today. There we go. So can everybody see, you should be looking at a chart of the S&P. Can you see that? And so, yeah, Scott, I'll address your comment. Still a bear. I'm not a bear. I'm just reading the charts, what they're telling us. Right now, they're telling us we are at a strong resistance level that and if this particular downtrend that we see here on the weekly chart is to stay in effect, because it is still the overarching theme of this market, then we could anticipate a move back down from it hitting its head on this resistance. And that has nothing to do with being bearish and or bullish. It basically, that's what the charts are telling us. Okay, great, thanks. I'm glad you can see the screen. So what is the screen of the S&P telling us? One is we have hit the overhead supply here that was generated from this downtrend that started back in July of last year. It peaked and we hit it, and it basically it formed when we made the high on the first week in November last year. And again, we pressed up today, or this week. There's a daily chart here on the left-hand side. Pressed up, came right up to that resistance line. It's not selling off hard, but it's giving us areas of concern that it may go back down. Again, if we're anticipating it doing something, holding symmetry with what it did back here in November, we could anticipate basically a fall back down to about the 38.2, which is about a little bit over a 4% drop, same way it did last year, and then pop back up, and it ricocheted off this, close to this line 1, 2 times, 3 times if you count that one, but the market again went into a very volatile and wide range period. What are some of the things that Mike and I are looking at? Well, one, we talked about this on Wednesday night. What do we have going on here? Let me get my other, there we go. New high on this uptrend, but look what's going on down here. unable to make that new high. I talked about that both on, I think, the last update last night, and also we talked about it on a Wednesday night, is when you start getting these divergences on negative divergences while it's making new highs. It can still push up and make newer, higher highs, but this is telling us that the momentum of this move has just about been exhausted. And so what can we anticipate and expect to happen from there? Well, one, as I said, it could push on, break through this trend line, push on up and retest the highs from last year. Now, if we did push up through this high, this downtrend line right here, this downtrend resistance line, then we could be looking at, hey, we are now going back into a into an uptrend, because it would void this, but it would have to have a significant close above this downtrending line for it to no longer be in play, and then we would anticipate it to turn around and have a reverse polarity, and that line then would become a level of support for potential testing. One of the things that I'm looking at also is on the weekly chart. The weekly chart, things took off. They are approaching here on the momentum past highs. They've actually blown past them a little bit. And so I will be taking a look over this weekend to see how this high for this past week, this up week, compares to past highs on a weekly basis. Is it at extremes? If it's at extremes, again, it's not a time to go short per se, but it may be a time to say, hey, I'm not going to go long at this point. One of the things that if we have conviction that this level of resistance will hold, we may look at it nibbling a little bit on the inverse index ETF for either the SPY, which is SPXU, and then see if we get a blowout, possible blowout to the downside. May be able to pick up 5, 6, 7% on a reversal trade, because a healthy pullback would put us down here at about the 1982 level, which is a 38.2% retracement that we've been talking about. And this is on the S&P. Anyway, isn't it interesting that buyers took the price up right up to the line, and then basically it appears to be stalling. Yesterday we get a spinning top doji. Today we're getting a spinning top. But again, we have not had we've had several breaks below the 8-day, but none of them sustained. The 8 and the 20-day have been supporting this uptrend ever since we made the turn back here on the 11th of February. Let's go on over to, got too many things popping up here. Let's go over the NASDAQ. There we go. Now the NASDAQ actually did pop above its this downward trending line, and that's where we're keeping our eye on it to say, okay, is this breakout going to succeed or is it going to fail? Again, we have the similar type of thing shaping up here. We have, excuse me, we have this low negative divergence. We have negative divergence also back here on the momentum indicator. However, we do not have negative divergence, and the weekly indicators are not really showing us any weakness at this time. And so at this particular point, I'm going to be treating this like a regular pullback. Where will I be interested in NASDAQ? In other words, making a trade on the QQQs or the TQQQ, is when it gets back towards this trend line here, and are the moving averages. And so we'd like to see at least a pullback to here. Of course, a more significant healthy pullback would put it down about the 38.2% retracement on the fib. That would be the fib from this low up to this high. and we will see where we finish today to basically interpret what's going to go on from here. But clearly, we're at overhead resistance. This is a resistance zone on the NASDAQ all the way up from, up about, well, if you take it all the way to the top, 4740, and it entered that resistance zone as soon as it popped above the 4435 level, or 4495 level. And so this whole area here is a level of resistance, as we can see, because of the price action that took place in the the October, November, December time frame of last year. There we go. Let's see what else we've got here. Russell. As far as today's chart goes, the Russell was actually looking a little bit stronger, as I said, than the other two indexes, in that it's not. In fact, it's up a little bit, where the other indexes were down just a little bit for today. And so it's holding its own fairly well. Those of you who have read any of Steve Bigelow's trading philosophies know that this would be considered a doji sandwich, followed by another doji. And if, in fact, it explodes to the upside, what's the expected move, short-term move on that? It would be basically the length of this candle here. Again, I left the Fibonacci's in on this one to kind of reflect where might the healthy retracement be. Back here to the 38.2% retracement, or the 23. The 23 looks very interesting because you've got a convergence of the, this is the 100-day moving average. It's got its head buttoned right up against the 200-day moving average and this downtrending resistance line. Great move this week on, for the indicators. Nice move on the Russell for the week. What are we looking at here? Again, the negative divergence as it's moving up here, it is slight. It's not as visible as not as visible as it is on the other indexes. And so if the Russell breaks out, that may invigorate the other two indexes to also go on with their potential breakout. So we'll have to keep an eye on that. If we get a pullback, again, I'm going to be treating this as if it is a potential, we have to respect the uptrend until it's telling us, hey, I'm not going up anymore. And at this point, nothing has basically said, hey, I'm not going up anymore. All I'm highlighting today, guys, is just the clues of where things are hitting their head, where it may pull back to, and as long as this uptrend line stays intact, we can look at taking trades off of that uptrend line. So let me find... So any questions on the, I'm going to check questions right now. There it is. And so, yeah, Eric, you're absolutely right. And I hope that that showed up on TSI on the RUT. Yeah, it is basically, I'll go back to that chart real quick here. I might go back to that chart real quick here. That's one of the things, if I'm using my multiple screens, I can pop between screens a lot easier. But yeah, let's go back here. I think it shows it very well. What Eric has highlighted and indicated is basically this level of resistance across here on the momentum and also the TSI. And so If the price action were to basically bounce around and just kind of start to move sideways, we would expect the TSI to hit off of this level and then roll over. But as you can see, at this particular point, we have not rolled over yet. Good call. Okay. I'm not going to spend a lot of time on this chart, but I've had it in the presentation now for the last couple of weeks. Right now, you know, our price action on the S&P is being confined within the cone of silence, as I fondly refer to it, and this rounded top is still intact. And so basically what that tells us is we're at a level of resistance. There's a strong level of support at 18. Now let's all be just patient with what's going on. This is a quarterly chart on the S&P. Eric, you asked monthly chart to be Begor 2014. Yeah, you might want to. Can you clarify that for me? And so, but just be aware, hey, we're still living within this. We're very, very close to this resistance line. That is the downtrending resistance line. So, path of least resistance. At this particular point, I think the market is ripe for a pullback. I will still respect the uptrend that has been taking place for the last, since February 11th. At the same time, though, I must be cognitive of that larger term pattern that's been going on since July, where you'd get a real healthy sell-off of about 10+%, bounce back, and on the S&P, bounce back up, then for a gain of about 10+%, about 10 to 14%, and then a sell-off, and vice versa. That, until that pattern is broken, the symmetry of that pattern will still have effect on expectations of what the market's going to do. So, okay, I will do that. That's a good time to do it. Eric points out that I'm going to go back to the Russell. I think I'm going to go back to the Russell. There we go. On the, am I looking at the weekly? Yeah. Or the, hold on a second. Okay, we've got a monthly and a weekly here. And Eric was mentioning that the momentum was also getting up close to where we'd hit this previous high that goes back to, sometimes, back in this area here. And so it's approaching that resistance area, and also on the this is 2014 level also. I'm not sure exactly I'm explaining what you're trying to say to me, Eric, but yeah, just this is where you can utilize and just draw your trend line straight across, and those levels of past resistance on the momentum, when you start approaching those, it's time to start paying attention. Do it, it's a TSI chart. I tell you, I'm not seeing exact. Okay, I'm not seeing it on exactly what you're sharing with me, but let's see. Go back to monthly. Okay, thanks, Eric. The monthly chart TSI line shows we have hit our head. You were on the daily chart momentum, and so it was basically the monthly chart. So let me try that one more time, and and then we'll move on to the rest of today. Monthly chart, there we go. On the Russell. Okay, here's the monthly chart over here. I think he was talking about going back to 2014, which is about here. And yes, it hit its head here, and then it started falling down on the TSI, made a brief little stab up with a, oh, I think I know what you're talking about. Basically, you're talking about this trend line that basically goes from here and extends down here. And yeah, it has, and then we can also go here to here. It is in the process of bumping its head, or it has already bumped its head. We don't know if it's going to roll back over or not, but that's another great way to be able to identify when a longer-term trend has in fact, or a long-term trend has been changed, is basically you can, and that's one of the things I like about using the TSI, is you can look at it and say, okay, we came out and bounced our head, came down, this put in a new low and broke out and moved higher. You do basically the same thing over here, and that would have set us up nicely for the uptrend that started in 2012. So I think that's what you were after, Eric. And so let's finish up here. Path of least resistance, at least right now, I think that the price action is at a very strong resistance zone. I think the reasons to be buying are drying up for a little bit, so that a corrective, at least a short-term corrective move back down may be in order next week, because after the 18th, things are going to stop up. And next week actually may be a very, after a slight pullback, then it may go quiet, because the week after that we run into the Fed meeting. And so then everybody will be holding their breath for the last week of the month. Okay, here's where we're at with the active trend trading systems. We got hit on Facebook early in the week, but then took some profit on XRS, and we had a great trade on Tesla this week, in that we were able to double up on one put and basically almost max out the gain with the call side. I gotta find something here. There we go. And so, okay, hey, thanks, Eric. I had to refine my question and answer period. So here's what we're tracking with regarding to, once our strategy 1 trades start to kick in, which they're starting to do that with some pre-earnings trades, then our equity line will start catching back up with this line here. One thing that I'm really, really happy about is we opened the Tesla trade under the strategy 3. We opened that up a little in the last part of September last year. We basically paid for it. The position cost us $90.10. Expand that to to the contracts that we bought. We bought one put, one call leaps that expire in 2017. So that was $9,010 invested. And since September of last year, the last part of September, we have taken in and cleared $91.66 or $9,166, which now gives us a cost basis of a negative 1.56. We will continue to sell weekly premium against that. We have 40 weeks left until the expiration date of our long leaps, and even if we and we've been hitting at about 75% winning trades to losing trades, limiting the losses to no more than 1.5 week worth of potential premium. And so if we continue on that track record between now and January of last year, we'll collect another $9,800, almost $9,900 against this position. And then if there's any value left in the two leaps, or one of the leaps by that time, then that, and we sell that, that will just be icing on the cake for this particular trade. The S&P trade is continuing on to do very nicely also. But I'm very pleased with targeting. And if you are a premium member and you want to find out what we're doing with this and how to set up the trade, you can go to our website here at activetrendtrading.com/training-webinars-recordings and look under strategy 3 for how this trade sets up. So first Saturday in May, we will be having the Bay Area Moneymakers meet at the San Jose Masonic Temple. We will be talking about using indicators correctly. Again, we have our regular premium training every Wednesday night at 6:30. And I want to remind everybody that Active Trend Trading System is based on basically the 5 pillars of trend trading. We basically identify what to trade, whether it be top quality IBD growth stocks or index in ETFs, when to enter, when to exit, what strategy we're using, and what we expect to happen. I am a firm believer that you have to have a system in place and be successful in the system. First, trading stocks and index ETFs, and then we've added to this 2 smaller strategies, one basic options and the other wealth building and income, and that's that strategy 3 that I showed you with Tesla to round out the strategies that we work, because I want to keep things not to too many strategies and keep them focused on rolling back to the trend trading system. I got a really great email from somebody that was so very appreciative. They said that because we have the wealth building going on and it's been doing well for so far in 2016, it has more than offset just some of our trades we've missed out on the stock and index portion. So if you are viewing this and you're watching a recording of this, we like to invite you to join with the Active Trend Traders, and I offer a 40% discount on the premium membership for those who take the time to watch this video. So that's all I've got for today, guys. Let me see what kind of time we have. We'll see you next week. Have a really great weekend. My wife and I are going to the mountains because our house is being shown this weekend, 2 days, and we're going to get out and just kind of relax after all that hard work we put on doing the renovations and that type of thing. So trade wisely, trade profitably. And now I'm open to look at individual stocks. Mobley. Yeah, Jorge, Mobley has been acting kind of cool here recently. Let me get out of this. Whoops. We may actually find Mobley coming if its fundamentals start looking okay. We may actually see it come back on the onto some of the premium IBD list. Mobley, Mobileye. Okay. Okay. Clearly, okay. We have broken the downtrend. And and we have broken the downtrend on, I don't know if I have volume over here, I do. Major concern on this is that we've broken the downtrend, but it's been on, less than stellar volume. There's a lot of stocks that are doing that, but now you've got a couple of things going for you, Jorge. You can either, you can draw a support line in here, or let me do that again. You can draw a support line in here for your short-term trend, and when it comes back and bounces down against that level and or the moving averages, that would be your key to get in. It's extended. You don't want to buy it here, but at the same time it is moving up nicely. When our earnings are on the 9th of May before the market opens. And so it may, it would not surprise me to see it pull back down here to the 38 level, which is the breakout from this area, and then move higher from there. Or it may move back all the way down to the 100-day moving average, retest that, and move higher. So you can see it's still below the 200-day moving average, which is up here at the high point, and I would anticipate that to be pretty strong resistance for Mobileye, and it corresponds to some strong resistance that it's seen previously, and so that overhead support could come in and just squash you. Okay, let's see. Facebook. Tracy, I still like Facebook for a potential pre-earnings trade. This is the fib box that basically goes with the move from here to here. And as you can see, day before last, on Wednesday, it came down and it tested hard against that, but then reversed up, off of this 107 level. And now today we see it coming down, it's testing the 50. And what I'm waiting for is, for one, the price action to settle out a little bit. And then we'll probably look at next week trying to plan a trade probably around this, 109 level. Bouncing back off the 50 if we get another retest. And so, yeah, there was a lot of noise on Facebook this past week, and the noise was due to, a news organization that putting out information that the bookings for Facebook, the ad bookings were behind pace from what they were last year, and apparently the person who put that out got their hands slapped because, one, it was not accurate and they didn't have the authorization to release that information. So Mobley, see support at the 200-day, and I think we answered that, didn't we? Is that support or resistance? So, okay, AMBA, VXX chart. Let me give Tracy or Kieran my thoughts on VXX. Okay, here's what we got going on with VXX. Now, VXX is an ETF that emulates the VIX, the VIX, which is the volatility index on the S&P. And like its namesake, it is at extremes, but it's down in a level where past, it's found past support, and combine that with the indexes themselves hitting their head up against resistance. This is at support, and again, playing out the idea that price action is going to emulate or be very symmetric to how it was back in February, March, April, May, June of 2008, then we can anticipate if that in fact happens, anticipate this bouncing off of this support here at about the 1681 level and moving up to, I'm not going to say it's going to move up to its high, but could it do a 50% retracement? Sure. Get back up here in the 23 to 24 level. And if you get a really hard push to the downside, I mean, you can go look at what's taken place. This was the high on the market back in, when is that? 8315. That was the market low up here. It reversed, and again, when it gets to those extremes, and as you can see, this high right here was on 2/11, the exact day that the market reversed and fell over, or the market reversed and sprung up, excuse me. So those are my thoughts on that. And that's why I was willing to do the speculative call trade going out to June. It was an inexpensive call, about $1.40 for the June 19 calls. And if it bounces back up and even revisits up here in the 20 level, the 22 level, and if it gets back up there into those levels, it will be, that'll be golden. That will that will work out very well. Tracy also points out that we've got positive divergence on the TSI and some nice positive divergence also on the momentum. One of the things I'll highlight, because this one goes almost hand in hand with the inverse index ETFs, is take a look at the last year when the market was hitting its high, which is right here in the early November time frame. This caught a bid and ran all the way up to the top of its moving average envelope. Well, that's a 20% move to there. Then it fell back down, but it did this very constructive basing pattern where it fell back down to support at the 18 level, bounced back up, then it fell down to support. And so this is, if this is going to repeat itself, what I would be looking for is for us to get kind of another basing type pattern here. And so if that is the case, then I'm utilizing the lows here as the start of that basing pattern. So does that work, Kieran? You probably got more than you wanted to know about the volatility index. Okay. AMBA. AMBA is a cousin to Mobileye. And so thanks, Jorge. AMBA's actually looking pretty good. I don't like that we've got momentum kind of falling off here on a daily chart. When is earnings? Earnings are coming up on all the way out in June. So it's probably a little bit too early for a pre-earnings run. However, we do have an interesting formation. I don't know what we want to call it. But if we do take out this high here, that would be very positive. And so it is acting, it's acting pretty good. It's kind of pulling back a little bit. Volume has been okay. We get a one buying volume here, and so clearly it is up against it, and it's going to see if we can bust on through. You can basically do a couple of things. One, you've got, if I can get my trend, there we go. You got that trend there, and then you've also got this trend here, which both are kind of in play. As long as that trend stays intact, You're going to watch for pullbacks into that area. You would like, if you're going to play the pullbacks back into the 8 or to the trend line or the 50-day moving average, what we'd want to see when it follows through the next day or bounces back up off it, you'd like to see some additional volume kick in. And so and if you don't, then that's telling us that our momentum has not jumped into this trade yet. As you can see, momentum, while it bounced up here, it basically slacked off, and it's below what it was when it made this high over here. Let's see, what else are we looking at? Okay. First Solar. Take a look at First Solar. The solars have been getting kind of supposedly getting healthier, Tom, but I'm not quite sure what we're looking at here. Let's see. On First Solar, I don't want to, of course I don't want to do a stock checkup on this to see what their fundamentals were looking like. This is not a positive move, in other words, from here. However, we're rolling right back down into the support at the 58 level. It has earnings coming up on the 28th, which is 2 weeks from now. And I'm really kind of surprised we haven't seen a pre-earnings run and up to the upside. Well, we've actually been getting a pre-earnings run to the downside. So when something like that kind of happens, I always ask myself, okay, I think somebody knows something, because this isn't going, acting well for a pre-earnings. Because we'd expect in pre-earnings run, if there's positive expectations, the stocks will, kind of catch a bid and start to run up. And you'll usually get a 5, 10, 15, and occasionally even a 20% run up into earnings the last 2 weeks before earnings, 2 to 3 weeks before earnings takes place. And at this point, but we may find the support next week. We'll see what transpires. Let's see here. There we go. Synergy, SGR. Again, Jorge, this would be one I would want to run the stock checkup on, but it is getting above average volume here on the bottom as it's pulling back up, slightly at really this is a stock that probably would not interest me simply because it trades on average about 201,000 shares per day. But it looks like it could be constructive. And you got to remember that, I would probably want to see, it may run all the way up to 16 or 18 perhaps. The idea place to be looking at it, though, for a potential entry will be when you get the coordination or when the moving averages get together and price action comes down and retests that. Excuse me. This is kind of interesting. Let's lay a fib on this, guys. I want to see something. I want to do a fib retracement. Give Jorge. So if it went from here, again, this gets back to symmetry of trade from here to here, here to here, then pulled back almost the same 100%. And at this particular point off this move, it is retraced about 50% of that. You would anticipate it finding resistance there at the 50% and also the 61.8. And so each one of those inflection points on the Fibonacci retracement is a a point where it could stall. Now, if it makes it up here to, and there's a little bit of information for you, if it makes it up here to the 100% of this move, here, and breaks through, then the next really strong point of contention gets up here at the 138.2. Because the 138.2 to 161.8 extensions on the moves, that tends to be the most common places for it to go to. So while we're looking at that type of thing, I want to throw up here really quick, one of the things that we have been trading this week, which is XRS. And as you can see, and this is a straight extension off of this move here, but we could do something very similar by, let me get rid of this really quick. And this is kind of cool. You take this, Fibonacci extensions on that move, symmetry of move, and look what happened this week. We broke out above the 100, and look where it basically, I don't want to do that. There we go. Look where it came to rest this week and found pretty strong, resistance. Now, if it pushes up and closes above that 138.2, then 138.2, then we can anticipate it to get to 161.8, and that would be a good place to take some additional profit off. And no, this isn't a trend line, Jorge. This is another type of line that basically this measured the time it would take and the angle based on the move from here to here. No, I'm sorry, the move from here to here. Once we got the breakout, that this would be the angle it would take if it covered a symmetric type move from here to go from here to there. And so that's just kind of, that's a line showing me both potential height and potential time frame up to that level here, which is up about 60. That's telling me that it could reach 60 by the 29th of April. However, we've got earnings coming up in between now and then. Let's see. I'm going to look at one more stock. You're welcome, Jorge. VX, BLBI. And so, yeah, on the index, the inverse index ETF, Tracy, it is almost time to really start looking at a time to jump in. Again, I may nibble a little bit before the end of the day, but I may just save it because there's a big announcement coming out this weekend concerning oil. And so who knows, if oil gets a pop next week, I may have to redo all of my analysis that I've kind of closing the week out with, and that's cool. I mean, that's why we have to maintain that flexibility. And so was there another TSI, BXX? Am I missing any? STMP, okay. And this will be our last one. Okay, STMP, great short trade. It was a great short trade. It has broken the 50-day moving average on higher volume. It is moving back into a potential earnings, it's running toward earnings season, 5-5 after market close. But as you can see, it has started to pay attention to these past levels of congestion. We see that in there. Let me see if I hope that, there we go. Right here. This is a past level of congestion from over on, Let me get a better picture there. Okay, this area is a past level of congestion, support resistance, where price action chewed around in before it dropped down to the 200-day moving average. Again, it gets into the same area, and look what happens to the price action on STMP. It starts, chewing around again, bouncing out, bouncing up, bouncing down. It is looking for a level of resistance, support to bounce off of. That level of support may be the 200-day, which is here. But the other thing on STMP is look at that selling volume. The selling volume is way outweighing the buying volume. And so we'll see what happens when it gets down into these areas to see if in fact it is ready to, to see if it is ready to bounce here at the 90 level for at least a run into earnings. This might be, with the, as you can see, the momentum has not turned back up yet. TSI is starting to turn up a little bit, but not really a significant divergence. But we may get, if it gets at the into the envelope and earnings are, maybe a week and a half away, it may be worth a reversion to the mean trade back up to the 20. But by that time, this might be on a daily chart, you'd be probably looking at about a 6 to 7% gain on it. So STMP tested the 200-day. Yeah, it's pushing down towards the 200 Jorge. It hasn't bounced yet, but it's showing candlesticks like it wants to, but then it gets overcome by the sellers. The sellers at this point are not quite done with it, but they may be done with it soon. So, hey guys, I am going to call it a day. Please shoot me an email that lets me know how you like this, this later time. I hope it works out for you guys. Have a great weekend. Hope I sell my house this weekend. And God bless you all. Have a great weekend. See ya.